Welcome to another weekly Forex forecast. As usual, we start on the DXY on the weekly time frame, and we see we ended the week on a bullish doji candle, and we had NFP and unemployment rate last Friday. Even though the data was mixed, it was not enough for to push price out of the expected range from last week. I'm going down to the 4-hour time frame here, and we were looking for price to remain in this area, accumulate more volume for the next leg up. This overall game plan is still in play. As long as we are trading within the range, I'm still seeing for price to accumulate more volume and giving us some form of a bull flag continuation for the next leg up. There is an argument for a head and shoulder pattern here, but as you can see, we did not break the neckline and finish the week within above the potential neckline. I would change my bias if I suddenly see some momentum early next week, some bearish momentum, and then I see price starting to form a bear flag continuation. Then I would change my bias and would look for US dollar shorts. As long as we are within the range, my bias is clearly for US dollar long plays. Moving on to Euro US dollar, it's the inverse picture. So we ended on a very, very clear doji candle. From the positioning point of view, there's still more than enough room to the downside, even though just to the next area of interest here at around 102. Going down to the 4-hour time frame, we do see we have structure here. We have a small liquidity area here, which is basically the top of this bear flag continuation, which was the start of the last bearish leg down before we started to form a bigger consolidation here. And we do have a 1, 2, 3 bear flag structure into this area of interest. We did even fully wick through and then have a very nice reversal candle, bearish reversal candle with the almost full body close. So does price need to do anything more to sell off? It does not seem so at the moment. There is another point here, another liquidity area, you could argue. But yeah, it's too far away and it's below this area of interest here. So at the moment, it looks like price did everything it needed to do for the next leg down. I'm going down to the 1-hour time frame, even though I shortly go to the 15 minutes to see if we have some area of interest. We have a small liquidity point here, which could be the base for the next short trade. So I'm looking on the 1-hour time frame for a clearly structured flag. We do have the first base. I'd like to see a second base and for price to tap one more time back into this liquidity area, and then I would enter a short continuation here. There is an argument for a 4-hour play, a bigger 4-hour play with the limit order somewhere in this area and then the stop all above here. So this is still a valid trade as it stands right now. It's just a slightly bigger stop, but there is more than enough room to the downside for somebody who wants to trade a more swing trade approach. Pound US dollar looks exactly the same. I'm just going to the daily here because the overall positioning we already know from the weekly time frame. So we can see here we have the same. We are on top of an area of interest here. We build a 1, 2, 3 structure into a slightly smaller liquidity area here, but it's still visible here on the 4-hour time frame. And price did also everything it needed for the next leg to the downside. So we have a 1, 2, 3 structure into this area, and on the 1-hour time frame, it's exactly the same situation as we have on Euro US dollar. We have a small liquidity point here, and I'm looking for a structured flag into this liquidity area for the next leg to the downside. New Zealand dollar, US dollar. Here we go shortly to the weekly time frame. Slightly different because we are already coming on a very strong momentum run to the downside. We have here a triple bottom and we had a very bullish week the week before, which basically is now completely reversed last week, and we still have a bigger value area below, so there is more room to the downside. And of course, I'm clearly looking from a price action point of view, I'm clearly looking for price to finish the last leg into this value area. And we can see there is an argument for a bigger flag, a bigger structure to the upside, because we do still have some gaps. Unlike the other two previous pairs we discussed, we have a liquidity point outside the structure, so price did actually not really tap into this liquidity point, but there is enough momentum to warrant a trade to the downside. Going down to the 1 hour time frame, we can see we are just sitting on top of the previous small swing low here and starting to form structure. So we will see that quite early next week if this idea will play out. We go down to the 15 minutes. We see we have a very similar picture. Almost all these US dollar pairs have a similar picture after the Friday NFP and unemployment rate data. We have a small liquidity point here. We started to form a bigger structure. The last candle here is the Friday closing candle, so this could also be like just to the upside, so we will see, but I'd like to see a second base here, at least a second base, a proper second base here, and for price to come up one more time into this liquidity area, and then I would enter a short in this area. US dollar yen looks very, very nice on the weekly time frame. We do have, actually, we discussed that a week before shortly, actually. We have the yen pair started to gain some momentum. So all the yen pairs looked similar. We had very strong momentum kicking into the downside, and are now looking for a continuation for the next leg down. We had again an undecided week last week, but going down to the 4 hour time frame, we can already see there's a very nice structure in the making. We have a clearly visible liquidity point here. On the left side, there's nothing really to worry. There's no really strong inflection point here. There are some to argue, but they are weak. So from a structural point of view, we are very nicely positioned, and it's starting to form a nice 1, 2, 3 structure, bear flag structure into this liquidity point. So if I get, and this, if price is finishing the structure and giving me here a nice 4 hour reversal candle, I'm more than happy to enter a short trade in this area. Swiss francs, Japanese yen, very similar. All the yen pairs, I'm not looking to buy the yen. I'm not looking to short the yen. I'm only looking for a long yen place. So we have here slightly different positioning. We do have some areas of interest here to the left. We are starting on the daily time frame, and we see we have some more valuable, more weighted inflection points here than we saw on US dollar yen, and price started to turn around in this area. However, after this very strong momentum run to the downside, it's expected for price to retrace. And we ended last week on a bearish doji candle. So going down to the 4 hour, we can see that price also, actually we go straight to the 1 hour. We see it clearer here. This is a bit more complex in terms of pattern separation. We have this area of interest here to the left. We left a small liquidity point here on the lower time frame, which then we got a V shape. We finished that with the structure, have a small hover, basically a flat flag, and then started to sell off. So this here is actually the start of the last impulsive flag to the downside before we then started to form a bigger structure. So price actually did tap back into this area in form of an ascending wedge, a 1, 2, 3 wedge into this liquidity point, and then started to gain momentum towards the end of the week. Bearish momentum, and I'm now looking for a bearish continuation. There were some trades in here, some trade ideas in here last week, because initially I was waiting for price to go back up into this area, and then for short plays here we can see that on the next pair we will discuss. But right now on the 15-minute time frame, we do have a small liquidity point here and the start of a structure. So as we saw in the previous pairs, I'm looking for a structured bear flag continuation for the next leg down. Positioning is not perfect because we are still trading above this low here. So even if price is starting to drop out early next week and then forming a bear flag continuation below here, that would even be better. So then we know the bearish momentum is confirmed and we still have more than enough room to manage it to this low, and then below the low, then then the gates are open. Pound yen looks slightly different. We start here on the 4-hour time frame. The difference here is that price did not tap into any liquidity point here to the left as of now. And we can see that we had here a small liquidity area here, and I was looking for a short trade in here. Actually, I took a short trade here on a 4-hour play. You can see the detail of these trades in my trading journal. The link is in the description. It ended up on a break even, and now on the 1-hour time frame we can see in terms of pattern separation. Let's shortly clean that up a little bit. So price came back into this area and then failed to sell off. In this area here I was looking for a short, but it failed to sell off. Instead of it formed a bull flag continuation, then it did not manage to tap into any of these liquidity areas here. Instead it turned around, but then again failed to sell off, came back up one more time, made a slight new high, a small new high, sold off, but then again failed to sell off. And this does not really look for bearish continuation momentum at the moment. So I would not be surprised if price is coming back one more time, tapping into these areas of interest here. And then if we see a reversal candlestick pattern in this area, I'm more than happy to enter a short in here for the next leg to the downside. Pound Australian dollar on the weekly time frame, we can see we are in a clear bullish momentum run, and right now we are kind of in no man's land. We do have a value area here like filling this previous week here, and we have two very, very strong bullish momentum candles. Going down to the 4-hour time frame, we do have, there is an argument for an expanding structure here into this area, and we are trading clearly above the previous high here. So right now I'm kind of neutral, like price is also neutral in between. I'm looking for price to finish the last leg into this area, but as soon as we reach this area, you can see this is a very interesting area because the structure is coming together with the higher time frame value area. So in this area, I'm expecting some reaction of price. So I would be happy if price breaks out back in and giving me some form of bear flag continuation. I would definitely consider a short after such a strong momentum run to the upside. On the other hand, on the 1-hour time frame, if price is accumulating more volume in this area, there is also an argument for a long play. So we do have a small base here, and if price is then forming some form of a 3-touch bull flag continuation, I'm more than happy to enter a long in this area because that would give me enough room to manage the trade to the high. And if it gains enough volume, there is an argument for price to even break above, and then we are in a very nice trade. So pound Canadian dollar on the weekly time frame, so we see it's very similar. We are also in a strong momentum run, in a bullish momentum run, and we are like the previous pair, pound Australian dollar, we are a bit in no man's land right now. Going down to the daily time frame, we are still in a bullish momentum, and there is an argument for price to finish the last leg into this higher time frame value area. Going down to the 1-hour time frame, So we are just trading through this area of interest here. So price came up with a very strong impulsive run into this area of interest, and then initially it looked like it would start some form of a bearish reversal, but then failed to sell off. And this price action here does not look like a bearish reversal price action at the moment. So it looks more that we might gain, we might acquire a little bit more volume here, build up a little bit more volume here for the last leg into the higher time frame value area. Going down to the 15-minute, we can see we left here a small liquidity point which goes through this area of interest, and if I get a structured bull flag continuation pattern, I'm more than happy to take a long up on the third touch for the last leg to the upside. Euro Australian dollar on the weekly time frame first. Again, we are in a strong bullish momentum run, second week in a row, strong bullish candles. There is an argument on the daily. There is an argument for price to tap into this higher time frame value area to close the gap here. We do need a little bit more volume for the last leg to finish the move. Going down to the 1 hour time frame, we can see that we had a bull flag continuation here and then some steps, and we are still now in a momentum run, so it might be enough to just tap into this higher time frame value area, and it's very similar. So I'm expecting some reaction of price here. So if price is breaking out, breaking back in and giving me some form of a bear flag continuation, I'm more than happy to enter a short here on the lower time frame. If price, on the other hand, is starting to accumulate more volume here for the last leg up, then there is an argument for a long, because we still have enough room to manage the trade in this range here for a good risk reward. So if I get a structured bull flag continuation into this liquidity point here, then I'm more than happy to take a long here just to finish the last leg. So Australian dollar, Swiss francs. On the weekly time frame, we can see we are in a bearish momentum run. It's the second week and we even left a gap here. We opened with the gap here and we are kind of in an area where it could go either way. So there is an argument for a bearish continuation because we still have this week to fill and we even have a gap to the higher time frame value area. On the other hand, we can see here, even on the daily, we have a more significant area of interest here, a value area. Going down to the daily time frame, and we can see we were just tapping it. On the 1 hour time frame, even better, or no, we stick to the 4 hour time frame. We can see this is clearly visible. It's a clearly visible low, and we just started to turn around in that area. So it's slightly higher risk at the moment. We did have a very nice bearish continuation trade here, which would be a 4 hour play, stop above, and then here it's a bit tricky. If you are more on the safer side and you have had your stop above here, you would stay in the trade, and you had a very, very nice trade into this value area here. Unfortunately, I missed this trade, but you can see how clear the structure was after this V-shape recovery, and then it really sold off quite aggressively. We also have a nice bear flag continuation in here. So very, very solid price action in this area. And we are now in this area where it could go either way. Positioning wise, on top of this low, I need a very, very clear price action structure before I consider a short. So I'd like to see for price to form a very clean bear flag continuation, into this liquidity point to then consider a short here. And on the other hand, if I see price gaining some momentum early next week and starting to form a bull flag continuation above this liquidity area after some bullish momentum, then I'm also happy to take a long for the next leg up again, for a bigger recovery play in Australian dollar, Swiss francs. So yeah, these are my pairs for next week. Thanks for watching and see you next week. Bye bye.